Well, we've just had Simon Reid of Imara Africa Securities at the desk, and pretty positive about the Nigerian markets at this stage. What's your view on where we're headed? Have we seen the bottoming out of the Nigerian stock exchange?
Good morning, Alicia. I think we have. I think what we're going to see is we've seen the market has gone quite low. It's still up about 8% year to date, but it's still at a very low level. And he's very right in saying most of the buying is from foreign investors. What we're waiting for to see is local confidence to grow, and I think that will grow over time as the reforms in the NSC and the other SEC reforms start kicking in, especially as everyone awaits the audit report on the NSC, which is expected by the end of this month.
While we wait for time to lapse, so we've still got banks standing as prime topic, looking at the risk that's inherent there with likely divestment actions by banks moving away, of course, from the universal banking model. How are you viewing the banking sector at this stage?
The banking sector is key to any growth in the stock exchange. If you look at last week, last week, as in most weeks, 60% of the trade volume in the market was on banking stocks. And really looking at banking stocks at the moment is we're waiting for the official announcements from all the banks on what they intend to do. GTB has announced that they intend to divest from all non-core banking operations, but some of the other banks haven't announced anything yet. We expect the rescued banks to do that as well. And I think as the banks announce what they intend to do, that'll bring things into play. But even those that want to divest, who's going to buy? Because most of these subsidiaries are really shells, which only really operated to service the main bank.
Yep. When it comes to answering that question of who exactly is going to buy, I mean, what do you see the spelling in terms for opportunities for those who are solely focused on insurance at this stage and taking positions of banks where they are divesting, the likes of a Custodian and Alliance and Continental Reinsurance as well?
I mean, in terms of the insurance sector, it has underperformed over the last few years, and it's still underperforming. I mean, last week the insurance index was down by 5%. I think we don't have a strong enough insurers that can seize the M&A opportunities that are available. I think until we see an insurer take the bull by the horns and try and move, I don't think we're going to see much movement there. In terms of all the other subsidiaries and the capital market subsidiaries which they might be getting rid of, most of the stockbrokers at the moment are apparently, according to a report made by SEC, are technically insolvent. So we can't see them taking advantage of this. So really, if not, it's going to be a foreign operator or one or two of the more stable operators locally.
Well, it certainly will be interesting to see how that plays out. Just looking at a bank that doesn't look to be hiving off any of its assets. It's a First Bank, certainly focused on more than just commercial banking. So there's possible talk of it formulating a holding company and that coming to the fore. What's your view on that speculation that's doing the rounds?
I think First Bank is moving towards a holding company. They first made an announcement that that's what they were doing. Some of the changes they made in the bank, especially on the senior level and restructuring, hints at that. But they also mentioned that the tax implications and other legal implications of the holding company have not been clarified by the central bank. I still wait for clarification along that front. Now, I think the announcement also that FBN Capital, which is the investment banking arm, has been selected as part of the debut issuance of a Nigerian Eurobond, suggests that they're going to be a key figure in that market.
Are there any guidelines at this stage of how soon we could expect to see some guidelines for a holding company, the kind of strategy the likes of First Bank of Nigeria would like to adopt?
Central Bank gave them, starting today, gave them 90 days, every bank 90 days to formulate a strategy and submit to the central bank on what they intend to do. I think over the next few weeks, as the strategies have been put in place and the information strategy going forward, they start telling shareholders and the public what they intend to do, I think more of that strategy will come out, and in that sense.
At this stage of the game, banks aside, of course, making up 2/3 of the markets, we know that it steals a lot of attention, but banks aside, where are you looking right now, Kayode?
Another sector that's doing pretty well is food and beverages. They've always done the likes of UACN, Nigerian breweries. Those kind of companies are still doing well and presenting pretty good results. Also, the construction and construction materials phase is now getting more and more interesting. We're seeing more interest from investors, especially in terms of the expected increase in infrastructure development, and also the big Dangote BCC merger, which is really going to be a really big fill up to the market. I think it's increasing attention on that sector.
Looking at Dangote Cement, I mean, that anticipated listing, many saying should trigger quite a bit of a rally on the market and a flurry of excitement. They're expecting it to be listed on the 5th of November. What are you making of this enhanced player in the market?
I think it's good for the market. It diversifies the concentration on banking stocks in terms of movement in the market. And so we don't just expect the banks to, whether they're doing well or doing badly, to affect the market as much as they do now. I think, but the one caveat I would put is the price of 135 naira, which is speculated as the listing by introduction price. I think that's overvalued. And I think you might have a situation where if the price is regarded as too high by the market, it might not give the necessary fillip it will have. I think they should go for a lower price that would generate more interest in the market and give the market the necessary fillip it does require.
If that price does come in lower and, you know, the board actually takes some of the advice that the market is giving, do you see this taking some of the investment case away from the likes of a CCNN or a Lafarge?
I think it does. In a sense, what it will create is a massive cement company that straddles both the market locally as well as it has international operations in over 6 countries. I think Lafarge has always been a player in the Nigerian market, and they're expanding their factories to increase their production. But I think this, especially if they get the economies of scales, which the Dangote Cement Board claim they're going to have, I think it's going to have a big effect on the market.
Let's leave it there. Kayode, thanks so much for your time this morning.